Buying a house these days. Oh, man. It's like trying to solve a puzzle, a financial puzzle.
Yeah, a tough one.
Definitely a tough one. But thankfully, our listeners have sent in some articles about the Federal Reserve and the latest interest rate decisions and what they might mean for, how much we'll be paying for mortgages in the future. So we're going to break down the most important details, make sure everybody understands what's going on, and hopefully give everybody a little more control over this whole process.
Oh, sounds good.
So the excerpts that we're going to be looking at are all from the article pasted text.
Okay.
And hopefully we'll get to the bottom of this.
Yeah, it seems like just when we think we have a handle on where mortgage rates are going,
Yeah.
the Fed kind of throws everybody a curveball,
Exactly right. Like just this week, the Fed lowered interest rates again.
I know.
This is like the third time this year. So now they've dropped the target range down to between 4.25 and 4.5%. But didn't they spend like most of last year and the beginning of this year
Yeah.
pushing rates up? Like it seems like they're going back and forth.
Yeah, well, they are. I mean, it does seem a little counterintuitive, but the Fed is really just trying to find that sweet spot, that perfect balance.
Okay.
And they raised rates pretty aggressively last year.
Right.
To try to combat that really scary inflation.
Yeah.
I mean, remember when it peaked at like 9.1%?
Oh, yeah. I definitely remember. Like my grocery bill was outrageous.
I know, it was painful.
Yeah.
Yeah, but now that inflation is finally starting to cool down,
right,
they're lowering the rates again.
Okay.
To try to stimulate the economy a little bit. Give it a little boost.
Okay. So now that inflation's cooling off, they're lowering rates. And that should mean that mortgage rates are also going down, right?
Well, that's what a lot of people think.
Yeah.
But it's not that simple. You see, the rates that the Fed actually controls are what are called short-term rates.
Okay.
And these are kind of like what banks charge each other for these overnight loans.
Okay, got it.
But when we're talking about mortgage rates, we're talking about long-term rates. These are typically, 15 or 30 years.
Right.
And those are influenced by a whole other set of factors,
Okay.
including something called the 10-year Treasury yield.
So even if the Fed lowers their rates, other stuff could be happening that could keep those mortgage rates high.
Exactly. And it happens all the time, actually.
Wow. Okay.
In fact, there are some interesting insights from some financial analysts on this exact point. Kevin Thompson over at 9i Capital Group
Okay.
is predicting that mortgage rates are going to stay somewhere between 6.5% and 7.5%, at least for the foreseeable future.
Okay.
And he says the biggest reason is this rising 10-year Treasury yield.
So it's almost like the Fed is like trying to pull rates in one direction, and the 10-year Treasury yield is pulling in the other.
Right, like a tug of war.
Exactly.
Yeah.
So was this rate cut like too little too late for people hoping to, get into the housing market or upgrade?
Yeah, that's a good question. Alex Binet, who teaches financial literacy at the University of Tennessee, he's been saying that all of the initial hype, all the excitement about 2025, being the year for these super low mortgage rates was maybe a little premature. The Fed's still clearly concerned about inflation, right?
Right.
And the jump in Treasury yields that we were talking about earlier.
Yeah.
That's actually pushed mortgage rates up recently.
Oh, wow. Okay. So what are the chances that like those mid 6% rates that everybody was hoping for in 2025
are
actually going to be even higher?
It's definitely a possibility, yeah.
Wow.
Yeah, and it's something that, if you're thinking about buying a house, you definitely need to be aware of.
Okay.
But we did also hear from Melissa Cohn over at William Revis Mortgage. She pointed out that this most recent rate cut, it had already been factored into bond yield, so it's probably not going to have a huge, direct impact on mortgages.
So no sudden relief for those of us who are hoping that mortgage rates would just, suddenly plummet.
Right. Not from this rate cut, no.
Okay.
But she did say that there is a silver lining, potentially.
Yeah.
This rate cut will probably lower rates on home equity loans.
Oh, okay.
Yeah. So that could be good news for, people who are thinking about maybe doing some renovations or consolidating some debt.
That is a really helpful piece of information.
Yeah.
So even if mortgage rates aren't going down much, there are still some benefits, for some homeowners with this rate cut.
Right.
So, okay, mortgage rates not looking so good.
Right.
What about that 2025 forecast that everybody's been talking about?
Right.
Those predictions for mid 5% mortgage rates next year, are those completely off the table now?
Well, wouldn't say completely off the table, but it's not looking great for those mid 5% rates. I'll say that.
Okay.
Most economists are now saying to expect rates closer to the mid 6% range.
Okay. So not exactly a dream come true for people hoping to buy their first house.
Right.
I guess this is why it's so important to like really understand what's going on so we don't get like swept up in the hype or those really optimistic predictions.
Exactly. Exactly. And it's important to remember that even if those predictions had come true,
Yeah.
the rate you qualify for is still going to depend on your individual circumstances. It's not just about the big picture. It's really about your own personal finances.
Okay.
So things like your credit score, how much you have for a down payment,
Right.
your income, even your location, the type of loan you're getting, all of that factors into the equation.
Okay. So while it's like helpful to understand what the Fed is doing and where all the experts are predicting, we really need to look closely at our own like personal situations too.
Absolutely. It's like getting all your ducks in a row,
Okay.
before you even start looking at houses.
Oh, okay. Yeah, good advice.
And speaking of the Fed, they're not done making moves just yet. They've signaled that they're probably going to cut rates only 2 more times in 2025.
Only 2 more times. So they're being like really cautious with it.
Yeah, that seems to be the message. Jerome Powell, the Fed chair, has been saying that they're going to be more cautious with any further adjustments.
Okay.
So they kind of suggest there's still a lot of uncertainty about what's going to happen with the economy.
So a cautious Fed, mortgage rates that are kind of being stubborn,
Right.
and then all of our own like individual financial situations to consider.
Yeah, it's a lot, right?
Yeah, a lot to digest for sure.
Yeah, but I think that's why it's so helpful to, do a deep dive like this. Because the more you understand about, what's happening, all the different factors,
Right.
the better decisions you can make, even when it feels like the market is totally unpredictable.
Yeah, I agree. I agree. Okay, so let's shift gears for a sec and talk directly to our listener. So if you're feeling a little overwhelmed by all of this,
Right.
what are some things that you can actually do to prepare to navigate this housing market in the coming year?
It's a good question. It's easy to feel kind of paralyzed when everything feels so up in the air.
Yeah.
But, there's some things you can control, right?
Right.
Even if you can't control the Fed or, the entire economy.
Yeah, I love that. Focusing on what you can control. What does that actually look like?
Well, it starts with, really taking a close look at your finances, like what's your credit score, how much can you realistically put aside for a down payment, and, what kind of monthly payment could you comfortably afford?
So basically, taking a good hard look at where you're at financially before you even start like seriously thinking about buying.
Exactly. It's like, I don't know, it's like building a really solid foundation for your home buying journey,
Okay, yeah.
Once you have that baseline, then you can start, exploring your options and feeling a lot more confident.
Love that analogy. So know yourself, right?
Right.
What else? What else can our listeners do to feel more in control?
Well, staying informed is really important.
Okay.
Keep an eye on what's happening with interest rates, but, don't get too obsessed with the day-to-day ups and downs. Remember, buying a house is it's a long-term decision. It's a long-term commitment.
So don't panic every time like, a new headline comes out about rates going up or down.
Right. Yeah, exactly. Instead, try to, look for those bigger patterns, those underlying trends.
Okay.
Could give you a better sense of like where the market is headed.
Okay. So we've got know yourself, stay informed. Anything else?
Well, don't be afraid to get some help.
Okay.
To talk to a professional.
Okay.
A good financial advisor can help you figure out a plan that's right for you, based on your own goals and how much risk you're willing to take.
Yeah.
They can also help you with all that complicated mortgage stuff. Make sure you're getting the best deal possible.
I think that's a really good point. Sometimes having an expert in your corner can make a world of difference.
Yeah.
Especially when it comes to something, as big as buying a home.
Absolutely. And they can cut through all that jargon and make sure you understand what's really going on.
Yeah, exactly. It's about feeling empowered, not intimidated.
Right. Exactly.
Okay, so we've got some good takeaways here. Know yourself, stay informed, seek expert guidance. But let's go back to those mortgage rates for a sec.
Okay.
We've talked about how they haven't dropped as much as some people were hoping.
Right.
Besides the 10-year Treasury yield, are there other things that could affect mortgage rates in the coming year?
Oh, absolutely. I mean, there's always a bunch of factors that can influence rates.
Okay.
We've talked about the Fed, we've talked about the 10-year Treasury yield,
Right.
but inflation's another big one.
Right.
If inflation starts to go up again,
Yeah.
the Fed might have to slow down or even completely stop its rate cuts,
Mm-hmm.
which could, indirectly keep those mortgage rates higher.
So inflation's kind of like this wild card that could like mess everything up.
It could, yeah. The Fed's definitely, keeping a close eye on it.
Okay.
Uh, Another thing to think about is the overall health of the economy.
Okay.
So if we start to see, really strong growth, a really strong job market,
Mm-hmm.
that could actually push mortgage rates up.
Wait, a strong economy
Yeah,
could lead to higher mortgage rates?
they could, yeah.
I thought a strong economy was like a good thing.
It is a good thing. It's
Yeah.
just, it's a little counterintuitive.
Okay.
But when the economy's doing really well,
Yeah.
more people are going to be trying to buy houses.
Okay.
So that drives prices up.
Right.
And that can make it tougher for people to actually afford a house, even if the interest rates are, relatively low.
So it really is like this dance,
Mm-hmm.
between interest rates and the economy and your own like financial situation.
It really is. And, it just highlights how important it is to be adaptable,
Mm-hmm.
to be flexible,
Right.
because nobody has a crystal ball, right?
Yeah.
Nobody can tell us exactly what's going to happen in the housing market.
Exactly. So as we're wrapping up this part of our deep dive, I'd love to hear from you. Like, what is the single most important piece of advice that you would give to our listeners who are, thinking about buying a house?
Hmm. That's a great question. I think my biggest piece of advice would be to focus on what you can control.
Okay, yeah, that's such an important reminder.
Yeah, I mean, you can't control the Fed.
Right.
You can't control inflation.
Right.
You can't just decide that the economy is going to do this or that.
Yeah.
But you can control your own financial situation.
Mm-hmm.
You can work on improving your credit score. You can really focus on saving for a down payment.
Mm-hmm.
You can learn as much as you can about the mortgage process.
Okay.
And if you do those things,
Yeah.
you'll be in a much better position to handle whatever happens in the market.
That's such a good, empowering message. Okay, so before we move on to our final thoughts, let's all just take a deep breath
Okay.
and remember, we've got this. That was a good deep breath.
Yeah.
Sometimes you need that,
Yeah. Especially with, buying a house.
Yeah.
It can be such an emotional process.
Yeah, definitely a roller coaster.
Absolutely.
With all the financial stuff, too.
Yeah. Yeah.
Hmm.
That's a lot. And it doesn't help that it feels like everybody has an opinion
I know.
about, what you should do, what you shouldn't do.
Oh, yeah. It's like everybody suddenly becomes a financial expert.
I know, right?
Yeah.
But that's kind of why we're here. We try to, cut through all the noise
Right.
and give you the information that you need so you can make, good decisions.
Yeah, with confidence.
Right.
Exactly. So I think we've done a pretty good job of covering this topic. We've talked about what the Fed is doing, what all that means for mortgage rates, what the experts are saying, and some things that you can do, to feel a little bit more in control of your own finances.
Mm-hmm.
So as we wrap up, what do you think is like the most important takeaway for our listeners?
Well, if I had to, boil it all down to one thing, I'd say knowledge is power,
Mm-hmm.
especially when it comes to, your money. The more you understand about interest rates and inflation and the economy,
Mm-hmm.
the better off you're going to be.
It's about being informed, right?
Right.
And not just following the crowd.
Exactly.
Right.
Exactly.
Okay.
And remember, you don't have to figure all this out on your own.
Right.
There are people who can help.
Yeah.
Financial advisors, mortgage lenders, even, good websites and podcasts can give you some really useful information.
Yeah, great resources out there.
Yeah.
So don't be afraid to, ask questions, shop around, really advocate for yourself.
I think that's such an important point. Don't just be passive.
Right.
Really take control.
Yeah.
Learn as much as you can.
Yeah.
Make the choices that, are right for you.
Love that.
Mm-hmm.
It's about being empowered, not intimidated. Okay, so before we officially wrap up, I want to touch on one more thing.
Okay.
We talked a lot about the financial side of things, but there's There's another part of this that I think is just as important.
Absolutely. I think sometimes we get so caught up
Yeah.
in the numbers,
Mm-hmm.
the rates, the down payments, the budgets,
Yeah.
that we kind of forget about what it's really all about.
Exactly right. Because at the end of the day, buying a house is about more than just,
Yeah.
the numbers and the contracts.
Right. It's about finding a place where you feel at home,
Yeah.
a place where you can, make memories, build a life, really plant some roots.
Well said. Mm-hmm. So as you're going through this process, remember that,
Mm-hmm.
let your heart guide you as much as your head. And trust that with some knowledge and a little bit of patience
Mm-hmm.
and some hope, you'll find that perfect place to call home.
And remember, even though our deep dive ends here,
Right.
your journey doesn't have to.
Yeah.
So stay curious, keep learning.
Yeah. Great advice. Couldn't have said it better myself. And if you ever need a refresher on this topic or anything else, you know where to find us.
Absolutely.
Until next time, happy house hunting, everybody.